it inflated the cost or increased the cost. That's why sale minus cost is equal to your profit. If your cost is increased, your profit will be low. So that's why if traditional costing is giving us low profit margin here, low profit or low product margin, it because it overstated or it overcosts the short star.
There you go.
So you see here, the profit gonna be lower. If you see the equation of profits, sale minus cost is equal to profit. When profit is lower, it's because the cost is high. If cost is high, so the traditional costing overstate our cost. So that's why our profit is lower. Whereas the long life, right? Sale minus cost is the profit. So in traditional costing, the traditional cost undercost the long life. Before we were having a loss, right? We were having a loss. So that is why it shows us a profit. Why? Because if we decrease the cost, let me change the color. So if we decrease the cost, our profit will be higher. Originally, the profit is lower, but due to this traditional costing, it shows understatement or understated cost or under cost. So that is why it looks like profitable in traditional costing, right? So there are three reasons why this happened. Number one, the traditional costing allows all manufacturing costs to product cost. And what is the manufacturing cost? Direct material plus direct labor plus manufacturing overhead. All other costs, selling, admin, it belongs to recall our second lecture. Non-manufacturing costs. This is manufacturing cost. Right? While the APC only assigns manufacturing overhead costs consumed by product to those costs, which is those are directly traceable. So in shipping costs is added here in the product cost as well, right? One difference is very clear here. Second difference, why this happened is because the traditional costing allow all the manufacturing overhead you using a volume related allocation. That's it, based on just one machine hours. That's it. While the ABC costing also use some non-volume related allocation base, right? Like number of hours, number of orders, number of design changes, right? The third is that traditional costing disregard selling and administrative expense because they are assumed to be period cost. Like I told you in our earlier slides that the shipping cost belongs to selling cost and selling cost is called non-manufacturing cost, and non-manufacturing cost according to traditional costing it is a period cost. But ABC costing directly traces shipping cost to product and includes non-manufacturing overhead cost caused by the product in the activity cost pools that are assigned to the product. The simple one, the product cost is calculated based on the combination of both direct and indirect costs, right? It creates some activities. So manufacturing overhead is going to be divided into some activities according to ABC, and you can calculate that, right? So these were the three differences that reports the total different scenarios of these two products by Baxter battery systems. Now coming towards the usage of this method. So if this method is so popular, then why it is not going to be used? We don't see in common factories, we don't see these kind of methods. It's because the external reports are less detailed than internal reports. So first of all, ABC is not going to be used for external reporting because you don't publish your detailed analysis of your product related analysis to outside users. Plus, it may be difficult to change the company's accounting system, like inventory system if we are using different LIFO, FIFO, right? So then it's going to be a different one. Plus, ABC is not conform or not allowed by the law, the generally accepted accounting principles, and it suggested don't use ABC because it is subjective allocation process, which means it depends on interviews with the employees, and you came up with the first stage allocation in which you are given the percentages, right? It may not be correct because judgment involved. Whenever there is judgment involved or subjective nature is involved, there there is a chance of manipulation. So the limitation of ABC is that substantial resources are required. It's too costly. It requires too much time and too much commitment from the top management as well, right? Too much data gathering is required. So it is desired to fully allocate all the costs to the product. Even non-manufacturing costs are also, like in our previous example, shipping cost is also included in the product cost. So limitation is that, so GAAP is not allowing you to use ABC. Plus, resistance to unfamiliar numbers and reports. Its reports are a little bit different. 5 activities are a little bit different, right? So there is naturally tendency that people don't like changes. If there is a new system coming, people naturally resist. The potential misrepresentation because judgment involved in first stage allocation, the numbers involved, some assumption involved, and that assumption may lead to misrepresentation, right? Or if a person is unfamiliar with the numbers or with this first stage allocation, he don't know what's going on. So that also creates, misrepresentation of the information as well. Here we go. So this is the final class participation example. You are required to take a picture of these two, basically, questions. One is, you need to calculate the first stage allocation. Percentages are already given to you. And then you apply those percentages to calculate the activity rates and compare with the actual one. And you need to answer that what's going on with this Westfield reserve, whether these results, are good or bad, right? So here, take picture of this 8.9 exercise. Done? Leo, Stella, Jordan?
Yes.
Okay. And also take this picture, 8.10, because 8.10 is the continuation of 8.9.
Can you go back?
Sure.
And to the next one, please.
Sure. Okay, I'm going to be opening the breakout room right now. Alima, Leo, Stella, please accept the breakout room. Giving you 15 minutes to do this group activity.
Okay.
Okay, so first read the
Okay.
question. It's very simple, although it's a lengthy one. Just please read once and you will understand that it is not a very long question, it's a very short question. Okay, I'm going to give you 15 minutes to do that. Okay, meanwhile I'm pausing the video, and after the breakout room we will talk about its solution. Okay everyone, so those who completed this class participation, please send it to our group. So let's talk about this question. So this question, you are required to prepare a first stage allocation, right, for the activity-based costing. So let me just do it here in a very, I'm just going to do pick one, this opening account. So 5% of teller wages. Teller wages is 60,000. 160,000 multiplied by 5%. What is the answer here? 8,000, right? 15% of assistant branch manager salary, which is 75,000. 75,000 multiplied by 15%. What is the answer here? What is the answer? 75,000 multiplied by 0.15 is 11,250. And then this is 5% off branch manager salary. Branch manager salary 80,000. 5%, which is 4,000. So if you add all these, it is 23,250, right?
Sir, for the first one, isn't it 80,000 or 8,000?
This is 80,000 here. 80,000 is the branch manager salary multiplied by this 5%. Answer is 4,000. The first one is
I mean, for
the first one.
1,600,000 times 5%. Is it 80,000 or 8?
This is 8,000. Use your calculator as well. This is 8,000, not 80,000. Because 10% is going to be 16,000. So this is not the 80,000, this is 8,000. Why? Because 10% of 160,000 is 1,600. So 16,000. 16,000 divided by 2 is 8,000. So it's not 80,000, it is 8,000. Okay? So we have opening account cost is 23,250. So we have opening account cost 23,250, and it is based on 500 new accounts. So divided by 500, answer would be 46.5. The question says the lowest rate, that is second stage allocation. Use first stage allocation divided by their activity measures. You find out activity rates. That is called second stage.